Good morning, everyone. Mike and Corey here today. Three topics we're going to talk about. China selling treasuries. And could they be doing that to manipulate our currency? It's possible. We'll see what's going on with that. Then we'll have the announcement for who won our stock market madness challenge and who wins the prestigious Ankerstar Silver Bowl. And then Corey's going to talk about why you might not want to be out of the market because the possibility of a recovery can move very quickly and it's hard to get back in. And he'll talk about something that happened earlier this week or last week and how quick the markets moved. So, as we get started, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I'll just start off by saying, had breakfast with a couple people today, and I mean, everybody is talking about tariffs. It is the first conversation, tariffs, tariffs, tariffs. I'm like, boy, I feel like I talk about this every day. I don't think everyone else gets as much chance to talk about it as like Corey and I do. So I just know it's first and foremost in people's minds. And some of the tariffs have started to take place and some of the retaliation. And, we're going to see where this negotiation, because that's what it is, it's a negotiation. And part of being in a negotiation is you're going to have to accept some short-term pain for long-term gain. So let's just hope that's all it is short-term pain. But so one of the articles that came out today talks about Treasury. Is China dumping US Treasuries? And so what would happen is when you dump a Treasury, you sell it. Therefore, the yield has to go up for people to want to buy it. So let me share this article and we'll take a look at a graph of this. But there's speculation, nobody knows exactly for sure, but that China is dumping this and that's causing the rates to go up. And when rates go up, eh, generally, if you're a saver and you're just in a savings account, or if you're buying US Treasuries and rates go up, you're like, yay, that's good for me. However, if you're buying a house, refinancing a house, or more importantly, I mean, those are pretty important, just so you know. But if you're a company and you need to borrow money to build operations and rates go up, that's not so good because that means the cost of capital is more expensive. So this headline came out this morning: bonds crater, 10-year yield spikes. So when that rate goes up, bond funds go down in overall value. So that's just they move inversely. So let me show you the actual graph, and you can see here's the 10-year Treasury graph. And here I'm going to go back to like a 1-year graph. So in the one-year graph, rates last year, were up around 4.5%. And if any of you have been buying a house or looking to refinance, they went down, as the Fed started to cut the discount rate, and they hit their low point at about 3.6, 3.5 right in September. So that's actually prior to the election. But then they started to creep up. And they go up typically if there's a concern of inflation. That's one reason. Another reason is people are selling them. But if they're buying them, the rates would go down. So now let's just go to the year to date, and you can see that the rates had been going down. Yay, that's typically a good thing. I know that's what Trump wants, is the rates to go down. And then boom, they just went shot right up. And the belief is that China, belief, could be anyone, could be it's probably not the Ankerstar Wealth book, but selling these off, making the rates go up. I don't think we would have that quite that big of an influence, but that certainly hits people. And so take this news in combination with retaliatory tariffs, and let's just see what the market's doing at the open today. Now, initially the market was down. So even since I started this like 5 minutes ago, it was in the red, but the markets have moved into the green. Will they continue there? Who knows? Who knows? You can see the headline still says Dow drops more than 200 points, but now it's up 130. So this thing can move quickly, which is what Corey's going to talk about next. But actually, before we get to that, hey, this is in the green. I love to share good news. We have our winner in the Ankerstar Wealth. Actually, Corey, anything you got on Treasury rates? Thoughts of China doing
No,
this?
yeah, it's it's interesting. My hope is that this wasn't part of Trump's master plan to get Powell to lower rates by, creating these scary headlines and things out there so that he could get rates lower for his like a myriad of different reasons. Because if that was the case, a lot of times it's like that one thing you want doesn't happen, and so he might
Yeah.
not get what he wants. Again, is that what's in his mind? It's anybody's guess. I just hope that's not the case.
No, I mean, I do know Trump wants rates to come down. It'd be pretty crazy to sink the economy to make rates go down. That'd be kind of, I can't believe he possibly would want to do that. If anything, you want rates to come down, you want to lower the inflation rate, which most people believe tariffs increase the inflation rate. But if you lower the inflation rate and growth slows, then you get rates coming down easily. So with that, let's go to our winner of the stock market challenge. It came down very close. Cindy had 2 points and Steve had 2 points. If Salesforce yesterday would have beat United Health, Steve would have won. He would have won 3-2. But United Health blew it out of the water yesterday. On a down day, United Health was up 5.4%. Salesforce was down 0.09%. So they ended in a tie 2-2, but the tiebreaker goes to who had more stocks in the final four. And Cindy had 2 of them, and Steve only had 1. So congratulations, Cindy. You are the winner. And I do want to just take a real quick look at our champion, United Health. Healthcare stocks had been down, beaten down last year. Keep in mind, a lot of their business is government funded for Medicaid and Medicare. And I imagine that's next on the chopping block as the government gets sliced a little bit. But let's look what United Health did to get to the finals here. And boy, if you would have just said, let's invest in United Healthcare. Of course, I'll point out that nobody picked United Healthcare in our competition. So nobody picked the winner. But here's what they did. In round 1, they were up 1.49%. Round 2, they were up 0.02. Round 3, they were up 3.3. Round 4, they were down 0.06. And then the championship round, they were up 5.41. Now, I get it. That wasn't 5 consecutive days, and I didn't look what United Healthcare did in those other days. But that's an incredible run of, just adding that up. It's almost 10% in a market that was down 10%. So they end up being the champion. What can we learn from this? A lot of great stocks out there, 64 of them. I think we had 31 entries picking 4 places each, 4 stocks each. Nobody picked United Health. They did the best. Only Steve took Salesforce. They did the next best. And then I think it was Walmart and MasterCard were also in the final 4. So honorable mention goes to Jaden, Kelly, and Joel, who each had 1 point as well. Corey, should I look at see who you picked? No, I'm just kidding.
I am not on that leaderboard.
But anyways, it's more fun when the markets are in the green, but we try to keep some light humor in here as well. So Cindy, we'll make sure you get your silver bowl. Maybe I'll hand deliver it since I know where you live nearby me. And congratulations with that. So stock markets go up and down, and they can go up and down quickly based on news. Usually it's news, not just one stock, although one stock's earnings can drive the market. So I know Corey's going to dive into how quick things can move, even within a day. So I'll let you take it over.
Yeah, no kidding. Yesterday was a fast mover too, but that one's not the topic. So on Monday morning, the market was down 2% or something like that. The market was down 2%, which these days is pretty small. It's like if I see, oh, things are only down 2%, I'm like, we are having a really good day. Are you thinking, are you on that train, Mike? With me, it's like 2%. Perfect. That's great.
It's certainly building up my tolerance for pain. It used to be,
yeah,
you know,
yeah.
6 months ago, the market was down 2%. I really, you know, oh no. Now you're right. It's like it's only down 2%. I'm feeling
I'm only
okay
down
with that.
2%. I'll tell you, I a long time ago, a young me bought a company that wasn't doing well, and it was a small sum of money. It was a little bit of a speculative position, and I remember it was like every day it'd go down 5%, and it occurred to me, Mike, at one point that this thing could actually, in theory, it could go down 5% every single day forever. And I that math just kind of like, I'll never forget that when that realization happened. And so I sold the stock. I was like, okay, I don't want to go down 5% every day forever. All right, so on Monday morning we get this tweet. This was a rumor. This was fake news. This was a lie, whatever, a misrepresentation. But Trump is considering a 90-day pause in tariffs for all countries except China. Well, what happened? If you look, that was right about here. It was Monday morning. The S&P, and this is probably small on your screen, that's all. Just read a couple numbers. The S&P was right there around 4,800 at the index level. In 30 minutes, the S&P was up to 5,200. If you kind of do the math, that's about a 9% move in 40 minutes. 9% move in the S&P 500 in the index. So you can see this is like a preview of what happens if we get some large resolution here, right? Then that's the pent up coiled spring, that we've mentioned before. Now, of course, if there is never any resolution, there probably will be a recession that is imminent here. So, I mean, those are the risks, right? There is downside risk, of course, from here if there is no progress made. However, if you want to sell out, or maybe you've been thinking, should I sell out? That 9% intraday benefit move on, some large scale resolution, that's what's looming. So, if you miss that on a real one, not a rumor, on a real one, then, you've just missed it. There's a few different ways to think about that, but I just wanted to point that out that, man, we got to see the preview, even though it wasn't the real thing. And of course, we've given almost all of that back, right? I do want to talk a little bit about investor psychology here, where when you can see from obviously late 2022 to early 2025, we had that really defined uptrend. What happens with people, investor psychology, and this is everyone, you got to recognize it in yourself before you can recognize it in others, right? But as the market's going up, people are continuing to work and make money, and they're thinking, man, I just want to put this extra money to work, but the market won't let me in. So every little dip you get, it's like, yes, that's my chance to buy. Every dip, people think that's my chance to buy. So you dip, you pop, dip, pop, dip, pop. When you're going down, people's mindset switches. Inevitably, somebody will be holding a negative position, like, oh, I'm down on this stock. I've given up my gains, right? And I'm negative. People switch. People stop thinking, man, I want in. People actually start thinking, man, I want out. I don't want in anymore. So then every time you get a pop, people think, now's my chance to sell. So it's literally like the reverse psychologically of when you're going up, you're trying to get in, man, I want in. And when you're going down, it's, man, I want out. So there's a lot of volume there and a lot of energy and selling pressure that has to get overcome by those buyers, right? You have to, at some point, Or like, you take somebody like me. As things get worse and worse, you're buying the dip, you're buying the dip. But once the market pops, I'm not buying anymore because I've bought the dip, right? I'm not buying the rip. I'm buying the dip. That's kind of the whole theory there. So as the dip turns into a rip when things are going down, you have that buyer pool that was there buying the dip. They kind of are like, all right, I'm done. So then the chances of you rolling back over are pretty high because you have people thinking, man, I want out, and you have people who have bought the dip, but they're not buying the rip because they bought the dip. So it's just that buyer seller balance. Anyway, just a few things there. Sorry if I went a little long.
Yeah, I think it's a great point. The psychology of the markets, yeah, it's definitely in the past has been that buy the dip, and then now it's sell the rip, right? So
Yeah.
it's the other side. Of course, we as long-term investors, we wanted to keep going up. If we were swing traders or day traders, we'd be messing around with that, trying to sell the rip, but we certainly are not doing that in any way. The hardest thing I'd say for investing is if you sell out, if you go to cash, if you, it's hard to get back in unless it dips. But then that means there's more bad information, which means it's even harder to buy back in. What happens though, a lot of times is the market goes up, let's just say 5 or 10%, and you're like, well, I kind of want to get in, but I missed that gain. If I would have stayed in, I would have got it. So I'll wait till it drops again. So it gets difficult. I mean, certainly I'll say, with this kind of high volatility and the markets have been, has it really only been 1 week since last Wednesday when they made the announcement? Wow, it's not even been a full week yet. It has been a painful week. I mean, for investing. So I understand your pain. I understand the pain in my own accounts. Um, we can shift risk. We can certainly lower risk. I don't know how many people are coming in saying, "Hey, I'm going to be higher risk now." I guess that is a true buyer's mentality. But we're making model changes coming up. Actually just going right now for the quarter, working on those right now to get that rolled out. So we're going to adjust to what the market's doing to optimize the portfolio. But do we know if the market's going to drop another 10%? We don't. Do we know if we're going to go into a recession? We don't. We can guess. We can read experts' analysis. But ultimately, like Corey said, one little piece of news, China gives in on their tariffs and we match the reciprocal. Yeah.
One tweet away.
One little connection like that, this thing will shoot up. I don't know how much further it can go down. I had that question this morning from someone, like how much further can it go? Well, it's hard to put a number on that. And plus, I don't know. We're dealing in theoreticals. I feel like China's retaliating with tariffs. That's bad news. We're hoping they give in right away. If they're not, shocking. Not. We're seeing some manipulation of the treasuries there. Not shocking. Hopefully all bad news is out. I can't imagine it gets much worse, but we don't know. So with that, we will continue to monitor, and we're going to be making some portfolio adjustments to start to see some different changes within your accounts. It's only been, I just got to throw it out, I think it was middle of February. It's not been 2 months ago we were at all-time market highs. Only 2 months ago. All-time market highs. Okay, here we are. We'll see. Someday the markets will hit new highs. It always has, it always will, or at least last 55 years, with the chart I like to show, it hits new highs. But this is a painful time. I think it's a great opportunity if you're sitting in cash already and you're just like, hey, I want to at least get my feet wet. Let me at least get some of the rebound to the upside. It's a good time to get in. And another reminder that April 15th is the deadline for putting in 2024 Roths or traditional IRAs. So another chance to put cash to work. So with that, we'll see what happens next. And, let's hope this negotiation is short. I think it was in the beginning of Star Wars, let's hope the negotiations are short. we'll see where this all goes. Thanks.